What happens when one of Wall Street's biggest Palantir bears goes on live TV to discuss their record-breaking earnings? You get one of the most powerful bull cases you've ever heard. Today, I'm going to show you why even the most prominent skeptics are being forced to admit that Palantir is a company unlike anything the world has ever seen. We're breaking down a brand new interview with Jefferies analyst Brent Thill. We'll cover why he says their performance is unprecedented, how he confirms their product is so good it sells itself, and why he ultimately admits there is simply no historical comparison for this company. This is a good one. Let's get into it.
Palantir hitting a record high this morning after a second quarter beat on the top and bottom lines. The defense tech company topping $1 billion in quarterly revenue for the first time ever. That's up nearly 50% year over year. Joining me now, Jefferies analyst Brent Thill. He has an underperform rating and a $60 price target on Palantir. Brent, great to have you weigh in here. I know that you've kind of been dealing on these two tracks when it comes to Palantir. The fundamental performance continues to be impressive. It's hard to make peace with the valuation. What did this new report tell you along those fronts?
I think what it tells us is Palantir is operating at a level in the software industry that we haven't seen ever before. For a company to put up 45% growth and a 45% plus operating margin, no one in the industry is doing this. So every software CEO is taking notice and trying to figure out what is happening.
Okay, let's be crystal clear about who is saying this. This isn't a fan on YouTube. This is Brent Thill, an analyst with an underperform rating on the stock. He is professionally bearish on the valuation. And what did he just say? Palantir is operating at a level we haven't seen ever before. He mentions 45% growth with a 45% operating margin. For context, in enterprise software, there's something called the rule of 40. If your growth rate plus your profit margin is over 40, you're considered elite. Palantir is at 90. That's not just elite, it's a statistical anomaly. When a noted skeptic starts by telling you that a company is literally off the charts and that every other CEO is trying to figure out their secret, you're witnessing something incredibly special.
Dr. Karp's announcement to you this morning that he would like to do this with fewer employees and grow 10x the revenue is also a huge wake-up call for all of us that AI is going to take our jobs. And so I think right now we're just seeing a company that we've never seen before in the history of software as it relates to the balance of growth and profitability. And if you put this in perspective, their market cap today is bigger than Adobe and Salesforce combined. And those companies have $70 billion of revenue. And Palantir next year is on 26. Palantir will have $6 billion. So, the market's forward paying for this in a big way. We haven't ever seen multiples at 75 times forward revenue. It's never sustained. We've had 4 quarters of accelerating growth. And so what we've said is that at some point when that growth just decelerates a bit, so will the multiple. And that's the biggest concern. But look, there's nothing to be concerned right now. They're executing incredibly well. And again, I think it's a scary moment for everyone to realize that they think they can grow 10x with fewer employees. Now, they added headcount in the quarter. They were up pretty materially. So we'll see if they can hold court on that. But again, I think we're just seeing basically a story we've never seen. And it's really hard to judge because there isn't anything relatively anything near it to judge it against.
Right, which I guess maybe helps explain why it's gotten to about $400 billion in revenue, because people you can tell yourself any story. I'm sorry, $400 billion in market cap, because you can tell yourself any story about just how steep this curve is going to be and how long it's going to stay that way. The talk about reducing headcount at Palantir while having this stupendous growth is interesting in the sense that you are a little bit concerned about their sales model, right, where they're not really going out into the field with a traditional sales staff and trying to get new clients.
Yeah, I mean, again, this super unique story, which is their deployments and their customers have spoke for themselves. So this is testament to how good their products are, that they don't need a big sales team. On every single call, Dr. Karp has said this repeatedly, that we have a tiny sales team, and he believes in no-steak dinners and golfing on Fridays with clients. He believes in producing a great product that speaks for itself, that then spins the flywheel. And again, something super unique we just don't see across the industry. The one company, Atlassian, started this way, and now they're having to invest in a direct sales team. So I think, again, what's really different are the growth rates, the go-to-market model. And again, this speaks to the testament of how good the products are. We spoke to many customers, and the customers are very happy.
This is the how. How are they achieving those impossible metrics we just talked about? Brent Thill lays it out right here. He, the skeptic, is confirming that Palantir has broken one of the fundamental rules of enterprise software. You're supposed to need a massive, expensive army of salespeople taking clients out for steak dinners and golfing on Fridays. But Palantir's product is so good that it sells itself. He says it's a testament to how good their products are, and that the customers are very happy and increasing their spend. This isn't hocus pocus. This is a superior go-to-market model where the product's success is the salesperson. This creates a powerful flywheel effect that other companies simply cannot replicate, and it directly fuels the insane profitability that leaves analysts like him speechless.
They're increasing their spend. They believe in the product. So this isn't necessarily any hocus pocus in terms of the product not working. This is a solution that works and is being driven, and sales and marketing is being driven by success of those customers rather than the steak dinners and the constant sales interaction, which again is another model that many are using in the industry and are following them.
Yeah, I bring this up not because you mentioned steak dinners and golfing, but I was trying to think of analogs for a stock that had this huge run, in its first few years as a public company. Everyone said it was too expensive all along the way, and that would be Salesforce. Now, it had nothing like this revenue multiple, but certainly on an earnings basis relative to its peers at the time, there was a constant kind of big pool of skeptics out there that said, they can't really grow into this valuation. Is there any kind of rationale to that comparison?
There's been no real comparison. I mean, we've seen through the years, during the 90s and 2000s, Siebel and what happened there. We saw Snowflake go to 50 plus times revenue, and then the multiple came back to single digits, and then recouped the multiple, and now is low double digits. We see two stocks right now that are, great companies like CrowdStrike and Cloudflare. They're between 18 and 25 times revenue, but then the gap to get from Cloudflare at 25 times to 75 times in Palantir, there's nothing in between. So there's no cities to stop at in between.
Right. And this is the final checkmate. The host tries to give him an out. And what does the bear say? There's no real comparison. He lists all these other great companies, Snowflake, CrowdStrike, Cloudflare, and says Palantir is in a league of its own with a valuation multiple that has no cities to stop at in between. This is the entire bull thesis in a nutshell, coming from a bear. The reason the valuation seems crazy by historical standards is because, as he admits, there is no historical standard for a company like this. You can't use an old map to navigate a new world when the biggest critics admit they have nothing to judge you against. It's not a sign of risk, it's a sign that you are the one creating the new benchmark.
Right.
Those multiples, so the highest multiples we've seen, again, most of them have come back because you can't sustain that growth for that period of time. So again, we're not saying they can't do it, we're just saying we've never seen it before. And I think that's a hard thing for many of us that have been doing this for a while. There is no comparison.
Right. Yeah, and we know the company, kind of looks to directly sell itself on an investor relations basis to retail investors. The street's been a little bit of a skeptic all along. We'll see where it goes from here, Brent. Really appreciate it.
So let's recap. We just listened to one of the most prominent bears on Palantir, and what did we hear? We heard that their financial performance is something never seen before in the history of software. We heard confirmation that their product is so good that it sells itself. And we heard that when you try to compare them to any other company, past or present, the only honest answer is there is no comparison. The entire bear case isn't about the company, the technology, the execution, or the customers, all of which he praised. It's only about a valuation number based on historical data that he himself admits doesn't apply. When your critics' only real argument is that you're too successful and too unique to fit their models, that's the strongest bull case you could ever ask for. What does it tell you when even the bears sound this bullish? Let me know your thoughts down in the comments. And if you enjoyed this breakdown, hit that like button and subscribe for more. Thanks for watching.